Got a look at our top stories. Time now to see what's making business and financial news. Last day of the trading week. Cole Stengler joining us in the studio. Morning to you, Cole.
Hey, Will.
Really beginning with the trade war between the U.S. and China hitting a fever pitch.
Absolutely. The U.S. has carried out its threat to hike tariffs on $200 billion worth of Chinese goods. Now, that's actually despite last-minute negotiations taking place in Washington on Thursday. Negotiators unable to reach a deal. That means the measures kicked in a little over 3 hours ago now. So more precisely, the U.S. has hiked tariffs on about half of all Chinese imports, from 10 to 25%. The flare-up comes as the countries actually seem to be on the verge of an agreement to lower tariffs and put an end to their nearly year-long trade dispute. The U.S. and China plan to continue talks in Washington on Friday, still hoping to reach a deal. In the meantime, China says it will take necessary countermeasures in response to the tariff spike. We spoke earlier with our correspondent in Beijing, Charles Pellegrin, to get more on what that could mean.
Chinese Ministry of Commerce quickly replied to this tariff hike, saying that they deeply regretted it and saying that they would have to take necessary countermeasures. Now, this means a matching tariff hike on American goods entering the Chinese market, but it could also be non-tariff barriers, like, for instance, increased customs scrutiny for American goods entering China, or an increased regulatory enforcement, so random inspections for any American firms that are implanted in China. But there could be a number of different ways in which they can hurt the American economy. For instance, they can target battleground states for Donald Trump's re-election in 2020. For instance, stopping the purchase of American soybeans from states like Iowa. They can also call on the patriotism of their citizens by calling on customer boycotts of American products like iPhones, for instance. And there's another tool that they could use is simply currency devaluation to compensate the price hike that would come with these tariffs.
Now, markets have responded negatively before to ramping up of the U.S.-China trade dispute. And we're actually not seeing much of that so far, at least in the major European indices, at least not just yet, as we're seeing here. Markets actually showing some gains. The CAC 40 here in Paris up nearly 1%. Frankfurt and London also all above the flat line there. It's a similar story for the major Asian indices. Now, Japan's Nikkei finished the day down about 0.25%, as we're seeing there, but otherwise some gains. Shares in Shanghai actually up more than 3%. Now, the somewhat measured response here is suggesting that investors were already anticipating a hike in tariffs, so that could be baked into what we're seeing today. Either way, investors will still be closely watching those talks in Washington to see if there's any signs of a breakthrough today. Now, Friday also marks the hotly anticipated IPO for Uber. The ride-hailing company is set to make its debut on Wall Street later this afternoon. It'll be the biggest company to go public since Alibaba 5 years ago. At the same time, some major questions linger over the company's future. Owen Barnell has more.
It's the most anticipated share sale of the year. Uber is going public, the ride-hailing app hoping to raise billions to fund its expansion into new markets. It's already a global giant, boasting 91 million users a month last year across 700 cities, and there's nothing small about its Wall Street debut. The company has been valued at $82 billion, nearly the combined value of General Motors and FedEx. At $45 a share, stock is on the low end, though there are reasons why. Rival Lyft floated in March and since then lost 27% of its IPO share price, and there are questions over Uber's practices that just won't go away. The company's employment model, where drivers are essentially independent contractors, has long been under fire. Drivers lack basic protections like a minimum wage and social security, and protests across US cities are a regular sight by workers struggling to make ends meet. It's not just the drivers. Uber has sustained massive losses over the last 3 years, $10 billion in all, and never reported profits. So far, that's mattered little to investors who believe future profits will outweigh current losses. But the fate of Uber's stock will determine whether the company can secure investment to match the scale of its ambition.
And finally, the world's richest man is gearing up for his next venture, trips to the moon. Amazon CEO Jeff Bezos unveiled a mock-up of a lunar landing module Thursday. It's called Blue Moon and will be built by the investor's rocket company known as Blue Origin. Now, Bezos, who also owns the Washington Post, has clashed with the Trump administration before, but space policy is apparently something they can agree on, Will. Echoing a previous call from Vice President Mike Pence, Bezos says he wants his company to reach the moon in just 5 years.
It's good branding, too. With that name, Blue Moon, all I can think about is this song.
Yeah.
I think you're too young for that one, though, Cole.
There's beer also, right?
Beer and Blue Moon. That's right. Good point. Cole Stangler, up to date on the business news.